As we learned in our previous video, accounting is the language of business. Specifically, it is the way businesses communicate their financial information. But who do we communicate with, and what things need to be communicated? Let's look at an example of a small business and see. This is Jill. Jill has decided to open up a network and computer consulting company. Her customers pay her to install IT networks and maintain their computers. But there are costs involved. Jill must purchase tools and equipment as well as supplies to complete her different jobs. As a business owner, what kinds of things would Jill want to know? She probably wants to know if she's making any money. In other words, are her costs more or less than the money her customers are paying her? As her business grows, Jill wants to buy a van to carry all of her equipment in, but she doesn't have enough money right now, so Jill wants to get a loan from a bank. What would the bank want to know about Jill's business? The bank would want to make sure Jill's business makes enough money to pay the loan back. They probably also want to know how much the business is worth and how much of it is already being paid for with debt. Finally, at the end of the year, the government will expect Jill's business to pay taxes on what she earns. The government will like to know how much money Jill earned and how much she spent and how she spent her money. All of these different groups of people, Jill the owner, the bank, and the government, are called stakeholders. Stakeholders are people or entities that stand to gain or lose from the success or failure of a business. Whether or not Jill succeeds affects not only her, but also her employees, the bank, the government, her family, and many others. All of these people are considered stakeholders in Jill's business because these people stand to gain or lose from her success. Because of that, it's Jill's responsibility to inform them about her business. She does this using accounting. Now, there are several different kinds of accounting depending on which stakeholder you're communicating with and what they want to know. For example, managerial accounting is used to share information with stakeholders inside the company, like management and the owners, to answer questions like how much money we are making and where we spend our money and how we compare to our competition. There are fewer rules surrounding this kind of accounting because the information stays inside the company. Financial accounting is used to communicate with stakeholders outside the company, like banks and investors. These stakeholders want to use the information to compare companies to make sure that they are making good investments. So there are stricter rules about how this information gets communicated. In the United States, we call these rules GAAP, or Generally Accepted Accounting Principles. Lastly, there is tax accounting. This is the accounting used to communicate with government stakeholders. This is highly specialized language of accounting that follows strict rules built by Congress and maintained by the IRS. In this course, we will focus all of our attention on financial accounting and the communication with external stakeholders, although much of this information is also useful to business owners. So, just a quick recap. Accounting is the language of business used to communicate financial information with their stakeholders. A stakeholder is any person or entity who could gain or lose money from the success or failure of a business. Financial accounting is the language and rules used to communicate financial information specifically with external stakeholders like banks and investors. For more information about this and other accounting topics, check out more of my videos on YouTube or visit ToriNorman.com.